Is it really possible to buy a business without using your own cash? Yes, it is. On this video, I will show you my favorite methods of buying a business without risking a penny of your own money. Like this video, subscribe to the channel, and tap the notifications bell so that YouTube can send you a notification the next time I release a brand new video. If you want to buy a business without risking any of your own cash, then click the information button up here at the top of the video and you can take my free online training course. So click the button, take the course, and let's get started. So in this video, we're going to talk about how you can buy a business without using your own cash, either because you haven't got any or because you've just chosen not to use your own money to buy a company. Now, the first thing you need to know is that this is going to limit your options, which means you've got to work a little bit harder to find the right business to buy. Now, let me give you the 6 most popular ways to buy a business without using your own cash. Number 1 is to buy the shares in the company for a nominal amount, let's say £1, which means that you then take over all the assets and all the liabilities of the company for that £1 or $1. Now, this means that you have control of the company, you legally own the company, and you own everything that the company owns. Now, that includes the assets, but it also includes the liabilities. And this is the reason people typically would sell you a company for £1, because you are then legally taking on those liabilities and they can walk away. Now, this is the route out for many business owners who have got a company that's maybe got into a little bit of a mess, and it's their way of just signing the shares over to you and walking off into the sunset to enjoy the rest of their life while you're left with all of their problems. And I always say to people, never, ever buy a company like this unless you know what the problems are and you know how to solve them. Otherwise, the owners are basically passing all of their issues over to you, and now they're your issues. Now, I have done this, and I've done this very successfully, but only because I knew what the problems were and I knew how to solve them. And one case study that I love sharing is a £4.75 million a year business that I bought for £1. And 11 months later, after transforming it in the meantime, sold it for over £1 million to someone else. But remember, I could only do that because I knew what the problems were and I knew how to solve them. This is not for the faint-hearted, and it's probably not a strategy for the beginner either. But it is an amazing way of buying a business without using any of your own cash. Method number 2 of buying a business without using your own cash is quite simply to use someone else's. Yeah, it can be a friend, it can be a family member, maybe you have what we call a private investor, someone who wants to be a part owner of a business, but doesn't want to go out and source the business to buy, doesn't want to do the negotiations, doesn't want to have anything to do with the running of the business. But this person has some money that they would like to invest with you because they like you, they know you, they trust you, very, very important, with their money. So let's say they've got, let's pluck a round figure out of the air, they've got £100,000 that they want to put into a business acquisition. You take that £100,000 and you use their money to acquire the business. And as a result, you've just bought yourself a business without using any of your own money. Now, what do they get for their £100,000? Well, they get part ownership. That might get 20%, 25%, 33%. Really depends upon the deal itself. They therefore then get a share of the profit proportionate to the share holding that they have going forward. And also, of course, when the business is sold, let's say they own 25% of the shares, they're going to get 25% of the business sale as well. So that's the upside for them. The upside for you is you get to use their money to buy the business, which means that you don't have to put any money into
the deal.
I'm interrupting your video with a very important message. If you are watching a video like this, it's probably because you're serious about buying a business. But watching free videos on YouTube will only take you so far. You need to take the next step. And the next step is a link that's somewhere on the screen up at the top, which takes you through to our free video training. There's no cost whatsoever. You watch the free video training and that will give you some of the essential basics that you need. Now, if you get value from that, then I would invite you to be part of my next Fast Track program. Now, the Fast Track program has been running for a couple of years now. We've had nearly 3,000 people around the world on the Fast Track program, and it's a Zoom program that you can attend from anywhere. It's broadcast from my living room to your living room, where I will teach you what you need to know to go and buy your first business. And there's a Q&A section at the end of each of the training sessions, so you can ask me all of your questions. Now, if you get great value from that and you're really serious about buying a business, then there's my mastermind program, a 12-month program where we hold your hand through the business buying process so that you can buy your first company. And when you have, I'll invite you into our inner circle, which is exclusively for people who've bought their first business. So that's what we've got lined up for you. It's up to you whether you take the next step. Anyway, back to the video.
Method number 3 of buying a business without using any of your own money is to agree with the seller of the business that the agreed sale price is paid to them over a period of time. So let's say, again, for round numbers and for the ease of this explanation, it's £100,000. That £100,000 is paid to them over the next 3 years. They don't get it on day one, which means you can acquire the business on day one for effectively nothing, and that £100,000 is then paid over a 2, a 3, or a 4-year period. Now, where does that £100,000 come from? Well, it's paid for out of the profits and the free cash flow of the business that you're buying. So very, very important point. You've got to make sure, your accountant has to make sure that the business has sufficient profits and sufficient free cash flow to pay that £100,000. Now, there are ways of renegotiating it later, but preferably you need as much free cash flow as possible to allow you to pay that £100,000 out of the profits of the business. But here is a question that might be in your mind. You might be thinking, who on earth would be crazy enough to sell their business where they get nothing on day one, but they get paid over the next 3 years? Let me tell you who that person is. It's typically someone who's had their business with a business broker for the past 3 years, hasn't been able to sell it, is so frustrated, all they want to do is walk away, and you arrive in their life, right place, right time, and we've got some methods to being in the right place at the right time, and you are now going to save that person from another 3 years of not selling their business by allowing them to exit the company. You take over the company, you pay them over the next 3 years, and they can then go and enjoy their life without the stresses and strains of owning that business anymore. In other words, it's a highly motivated seller.
Sorry for interrupting your video, but I wanted to introduce you to a great lawyer in the UK who can get your deals done for you. He's worked for 50 of my mastermind clients in the last few months alone. His name is John Andrews, and I've got his details right here in my little black book of contacts. You can phone him on 0345 241 2494, or you can email him on johnandrews.deallawyer@jmw.co.uk. If you want someone who can get a deal done, he is your guy. So let's get back to the video.
Method number 4 of buying a business without using your own money is one of my favorite ones. We call it the property deal. So the property deal is where the business owner also owns the property, typically the property that the business trades out of, and that is owned by the company that they are selling. So the company they are selling owns the property and it owns the business, and in some circumstances, it might be owned by the individual themselves, perhaps even owned by a pension. And they want to sell the property as well. Now, in this scenario, the property has a value, and the business has a value. But you don't want the property, okay? You just want the business because you're a business investor, you're not necessarily a property investor. This is what you do. And one of my clients did this recently, and you'll find this on our YouTube channel and also as one of our podcasts. What he did was he went and found someone to buy the property, and he wanted to buy the business, just the business. So the property was purchased by this third party, by the property investor. That money is given to the seller on day one. So they walked away, I think in this case it was with about £750,000. And then you pay for the business over a period of time, just like in method number 3 that we just talked about, which means that the owner gets the property value on day one. They get the business value over the next 2, 3, 4, 5 years. The property investor gets the property. So everyone's happy, and you're happy because you get the business, which is what you were after in the first place, without putting any of your own money into the deal. So method number 5 of buying a business without utilizing your own cash is to use the assets within the business that you're buying, the tangible assets, as a means of raising finance, part of which, sometimes all of which, but preferably part of which, is used to pay the owner of the business for the company. So let's say this business has some fixed assets. It might be forklift trucks. It might be some sort of machinery equipment, manufacturing equipment. And maybe it's unencumbered, which means it hasn't got a loan on it already. But even if it has, that doesn't matter too much because we're going to refinance that loan out. We're going to put a new loan on those assets, release cash, and that cash is then used to finance the acquisition. And this leveraged buyout is a very popular way of buying a company that has considerable fixed assets. In fact, in my private client group, I have people who are only interested in buying businesses with assets because this is their main acquisition method. So strategy number 6 of buying a business without utilizing your own cash is to use the money in your existing business, maybe profits that you've accrued, alternatively, to raise finance against your existing business to buy another business. So again, you're not using your own money, you're using money that you've raised off the back of your existing business. It's actually easier to raise money against a business that you already own than it is to raise money to buy a business that you don't yet own. So by raising money against your existing business, we can then use that cash to buy business number 2. And then what many people do is raise money against business number 2 to buy business number 3, against number 3 to buy business number 4, and so on.